but nothing to worry for you guys. Please focus on your examination. Even if if they notify the changes, I don't think they'll be able to, or they would be conducting examination before November 23 is my estimate. Okay, even if they do in May 23, syllabus content would be reduced. So right now, nothing to worry for you guys. Please focus on your examination. Even if they notify. So focus on your examination. That is what I was mentioning. Even if they come, don't disturb your routine. Most likely they may announce sometime in July. The draft is still at a draft stage. Good changes. You can now complete the entire CA course in 3 years time if you pass in the first attempt. So that is a welcome change. Okay, so that is the update from the notification. I've done a separate video. You can watch it whenever you are free. Coming back to our revisions, so yesterday we started with inventory, and we'll be continuing with inventory. So what I've done is I have I thought I'll take a couple of RTP papers. That is where I found some good questions on inventory. So sorry, just a second. Good questions on inventory. Let me share my screen also. And if you have identified anything, you let me know. I'll try to solve that in the class as well. I think I have to take this call. Sorry guys, someone had come up. So if you have any specific questions, you can let me know. Otherwise, I have gone through maybe RTPs. We're having some tricky questions, some lengthy questions. So that is what we'll be taking up. Let me share my screen. I hope you're able to see my screen.
Yes, sir.
And those of you who are on YouTube, you can join in the Zoom session using the link that we have provided. Okay, so let me just open the thing. RTP. Okay, so in this, these are slightly, lengthier questions, and we'll do a couple of them, which will give you a good amount of comfort on solving these kind of questions in the examination. Are you able to follow whatever I do on Excel, or you find it difficult?
That's all fine, sir.
Fine, right? Are you able to see my Excel?
Yes, sir.
This is the question. Okay. So now again, just to quickly recap or what we should be doing in these kind of questions is, we would be given some information, and based on which you have to determine the value of inventory either on a past date or for a past date or for a future date. Okay. Now there are different ways to do it: statement format or the trading P&L format. Trading P&L format may not work every time, so you should also be able to understand and be able to do in the statement format. Okay, marks will not be deducted even if you do it on using a P&L format or trading and P&L format, that is also fine. If you do using the statement format, that is also fine. Marks will not be deducted. Okay, you will get marks based on your correct answers. So here we have a question which says a trader prepared his accounts on 31st of March each year. Due to some unavoidable reasons, no stock taking could be possible till 15th of April 2021. So till 15th of April 2021, no stock taking was possible. On which date the total cost of goods in his godown came down to 1,50,000. Now, this is the value of inventory as on which date? $1,50,000 is the value of inventory as on which date?
15th April.
15th of April.
It is 15th of April. Then the question mentions that there were some facts which were established between 31st of March and 15th of April. Just a moment. Okay. So I thought I'll just draw and show this to you. So what has happened here is this is a timeline. Okay. Now stock take has happened on 15th of April. We have to work back and come to 31st of March and determine the value of stock. That is what is needed. So on this date, what they say is on this date, that is on 15th of April, they have said that 1,50,000 is the value of inventory. And in which term is that? The total cost. So this is at cost and which is given to be at 1,50,000, right? Then the following facts were established. Sales 1,23,000, including cash sales of 30,000. So we will see what is the impact of cash sales. But the total sales, so during this period, sales that have happened is 1,23,000. Okay. Then purchases, including cash purchases, 15,102. So you have purchases 15,102. Yes, Mayank. Yeah, I'll clear, guys. Please don't annotate. Okay, right? Then sales return during that period is 3,000. So sales is I've written this side, so I'll write sales return this side, guys. If you want to annotate, I'll do a separate Zoom session where I'll allow you to draw and do whatever you have to do. But if you keep on drawing in between, it's difficult for me, and it's also obstructing others. Okay, please don't do that. Right. So sales 123, and they have said sales return 3,000. Then sales return is 3,000. Then on 15th March, goods of the sale value 30,000 were sent on sale or return. We do this even further. 15th March, okay, sale or return basis. How much? 30,000. Okay, then He returned 40% of the goods on 10th April, approving the rest. The customer was billed on 16th April. Now, what has happened? On 16th April, you have billed. Billed how much? How much did we bill? 40% or 60%?
60%.
We billed 60%. And on 10th of April, somewhere here, he returned 40%. Okay. 10th of April, he returned 40%. Then the trader had also received goods costing 24,000 in March for sale on consignment basis. So, see, so many complexities. Now, in March, he has received. Received means he is a consignee. How much of goods? Goods costing 24,000. So, 24,000 of goods was received by him for sale on consignment basis. 20% was sold by 31st of March and another 50% by 15th of April. Okay, these sales are not included in above sales, meaning to say in these sales, consignment sales are not included. Should we include consignment sales in our sales figure?
No, sir.
Why?
So because it should be included in the consignor's book.
It is a sale of consignor. The consignee is only concerned with the commission income. Goods sold by the trader at a profit of 20% on sales. So, gross profit is 20% on sales. Gross profit is 20% on sales. Now here, because there is this gross profit thing, I'll just, I've done this in one of the previous class as well. I will again repeat it here. Many a times we get questions in the examination where they say 20% on cost or 20% on sales. And they'll say it is 20% on sales and cost is, let us say, 1,000. How much is sales? Now, in such situations, if they have given 20% on sales, assume sales to be 100. Assume sales to be 100. So profit will be 20% on sales, that is 20. So cost will be 80. Okay, you have to understand this logic. Now, if cost is 1,000, how much is profit and how much is sales? You can just do a cross multiplication. Okay, so that is 1,000 multiplied by 20 divided by 80. So this kind of approach you can follow to calculate profit when cost is given or sales is given. Fine. Now, coming back to our question, here we have been given cost at 1,50,000. Then we have been, given some movements of sales and all of that. Now, what we have to do is just understand this logic. Okay, what we have to do is using the sales or stock of 150, making adjustment of various items, we have to arrive at the stock as on 31st of March. So basically using this 150 here, you do whatever adjustments are needed. You have to consider each of the adjustments and you have to arrive at the stock of 31st of March. Okay. Now here, what works is your logic. There is nothing to by heart. You have to think what is to be included, what is to be excluded, and accordingly you will be able to understand what is the value of stock. Now, what required to certain value of inventory. Now, sometimes examination says value of physical stock. And sometimes they say value of inventory. Now, when they say value of physical stock, it is only the physical stock that is present with the entity that has to be calculated. Okay. When we say value of inventory, we have to consider even inventory that is held with the third party. Most of the times they will ask value of inventory. Please be very careful of these two terms in the examination, right? Now, coming back to the question, I'll use Excel now, that will be easier for me. They have given us value of stock as on 15th April. How much? 1,50,000. Now, this sales of 1,23,000 minus 3,000 of return. So net sales is 1,20,000. Now, this sale of 120, should we add to the inventory value or should we reduce to the inventory value to arrive at the value of stock? This is like a bank reconciliation, or whether we should add or whether we should deduct. What should be done?
Add, sir.
Add, sir.
Why should we add?
Because it was outflow.
Because the stock was there. On 31st March, we had the stock, we have sold it. So this 1,20,000 is not included in this 1,50,000. So whatever is the adjustment for this, we need to add. Do we add entire 1,20,000?
No, sir.
Then what will we add?
Cost only.
So we have to reduce the gross profit. So less gross profit. What is the gross profit percentage given? The gross profit percentage given is 20%. So 1,20,000 multiplied by 20%, you have 24,000. So 120 minus 24,000, 96,000 should be, this should be added. Okay, clear with this?
Yes, sir.
Okay, so with this, we have completed. Sales is done and sales return is also done. Okay, then coming back to the question, purchases of 15,102. Now, what do we do with these purchases?
Subtract, sir.
We will subtract because this should not be included in the inventory as on 31st of March. So less purchases, and they have given the value to be 15,102. So 15,102. We will reduce this. Okay. So add and less will do it separately. So we are done with that also. So purchase is also considered done. So 1, 2, 3 is done. Now, on 15th March, good of sale value 30,000 were sent on sale or return basis to the customer. When did we send? We sent it on 15th of March. Now, when did the customer confirm? Customer confirmed to us about this on 10th of April. So we sent on 15th of March. We got confirmation on 10th of April. Oh, I wrote it after that. Sorry. 10th of April should have been somewhere here. On 10th of April, we got the confirmation and the customer returned what? So I'll just write it separately here. We are on 31st of March. Okay. And this is 15th of April and this is 10th of April. Okay. Now on 10th of April, he returned how much? 40%. He returned how much? 40% of the goods. Correct? 40% only, no? He returned 40% of goods. Now, is this 40% included in the inventory as on 15th of April?
Yes, sir.
Is this 40% goods returned included in inventory count of 15th of April?
No.
Yes, sir.
Yes or no?
Yes, sir, because he returned it before 15th of April, no, sir.
Sorry?
As he returned it before 15th of April, it would be considered in inventory. Sir.
So on 15th of April, when we did the stock take, this 40% value given, goods of value 30,000, goods of sale value 30,000 were sent on sale or return basis. So here we sent 30,000 worth of goods. Out of this 30,000, 40%, that is 12,000. 12,000, where what? 12,000 are already included as a part of stock on 15th of April. Correct?
Yes, sir. 12,000 of sale values, but we have to make it.
No, yeah, it is of, yeah, I know it is of sale value. I'm comparing sale value only for now. So this 12,000 out of 30,000 is already included on 15th April inventory. Correct?
Yes, sir.
And this 12,000 of sale value should also be included on inventory on 31st of March.
Yes, sir.
Is everyone with me on this?
Sir, I didn't get you.
Okay, I'm repeating once again. We are on 31st of March is one date, 10th of April is another date, 15th of April is the third date. We sent goods worth sale value 30,000 on approval basis. Should this be considered as inventory on 31st of March?
Yes, sir.
Yes?
Yes, sir.
Entire
Yes, sir.
30,000 should be my inventory, obviously at cost. So from this, I will reduce 20% of profit. 20% gross profit is 6,000. So 24,000 should be my inventory on 31st of March.
Yes, sir.
Okay. Now, what did the customer do? Out of this, customer said, okay, 40% I am returning to you on 10th of April. So 40% means 12,000, including a profit of 2,400. So it will be 0,069. 9,600 he returned. Correct?
Yes. Yes, sir.
Clear so far?
Yes,
Yes,
sir.
sir.
Now this 9,600 is included in inventory on 15th of April.
Yes.
So can I say this 9,600 is included here? It should have been included here. So I don't need to do any adjustment.
Yes.
Yes, sir.
Now the problem is the balance 18,000. Is 18,000 in inventory on 15th of April?
No, sir.
It is not there. Should it be in inventory on 31st of March?
Yes, sir.
Yes, sir.
Yes,
So
sir.
only adjustment needed is for this 18,000. Are we clear?
Okay, yes, sir.
Yes.
And on this, we have to see what is the cost. Cost is 80%. So 18 5s are 80 plus
14,600.
Thank you. Sorry. 14,600. So if you see, no, not 14,600. Yeah.
Sir, 14,400.
14,400. So if you see 9,600 and 14,400, if you do the total, you get 24,000. Okay. I added one extra zero. 24,000. Okay. Out of this 24,000, 9,600 is anyways included here. This 14,400 is not included in this 15th of April because the customer has not given us back. So this 14,400 has to be adjusted to get the inventory on 31st of March. Okay, so here we have to add or deduct. The
Add
adjustment
14,400.
we have to add. So we will say sale on approval or return basis. Okay. Sale on approval or return basis. 40% is included. So 60% of 30,000.
Sir, please turn off the right to annotate on screen.
Just a second, I'll remove him out of that.
Remove him, sir.
Yeah. Because remove. Okay. 60% of 30,000 multiplied by 80%. Now, see, the reason why I explained you on iPad is for you to understand the logic. Are we clear with why we did this adjustment?
Yes, sir.
Everybody?
Yes, sir.
Any doubt?
No doubt, sir.
So in
No, sir.
exam, if at all you get some tricky question like this, okay, where you feel that, array, what should we do in the adjustment? A simple noting down on the, on a rough paper will help you. Okay, so that is done. Then, what is the last adjustment? The trader also received goods costing 24,000 in March for sale on consignment basis. 20% of the goods had been sold by 31st of March and another 50% by 15th April. These sales are not included in above sales. So now here, what is the adjustment that we should do? 20. So again, coming back to the tab, what are they saying? Goods costing. So goods costing how much? 24,000. Okay. Now out of this, how much is unsold as on 15th April? 30% is unsold. Out of this, 30% is unsold. Now, did we include this 30% of 24,000 on inventory on 15th April?
Yes, sir.
We included. Is it our inventory?
No, sir.
That is not our inventory. So we will reduce 30% of 24,000. Why 30% of 24,000? Because 70% is sold, and anyways, whatever is sold will not be a part of inventory. This is not also included in sales, so no impact should be given on the sales side as well, because that is not our sale. So consignment stock, that is 30% of 7,200 to 160. This you should reduce. Okay, so your inventory will be 150 plus 96 plus 14,400 minus 15,102 minus 2,160, 243,138. I'm sorry, I did a mistake. 30% is itself is 7,200. No? So that is through 238,098. Are we clear? Everyone, are we clear?
Yes, sir.
So again, I am again repeating whatever I have explained earlier. There is this balance sheet date, and there is this stock take date. We call it stock take or physical stock or whatever it is. This is the balance sheet date. Now you will be given this number. You have to make adjustments for transactions here and arrive at the 31st March ka stock. Now, if by chance you get very difficult adjustment, don't worry. Whatever you should actually do. So if we see the suggested solution for this, how many at 1, 2, 3, 4, 5. So this will be about a 6 to 8 marks question, maybe 6 marks to 8 marks, depending on the paper setter. Even if you could not do one adjustment or two adjustments, for remaining adjustments, you will get marks. Okay. So again, this is a question where you can easily score 4 to 5 marks aram se. No problem at all. Okay. See, again, big statements and a lot of errors just to test our inventory or calculating skills. Can we move to the next question?
Yes, sir.
Those
Yes,
of
sir.
you who are on YouTube can get to Zoom by using the link provided there. Okay, how many of you have submitted mock test? Ashwin's, I think I've seen. Others? I'm asking you guys.
Sir, I have not attempted. I will attempt tomorrow.
Others, how many are planning to write this week? No one? Or you don't want to? Okay, 2 of you want to write 3. Okay. Please write, very, very important. Very, very important for you to get an examination practice before you write the exam. Okay. Now, coming to another question. Again, this is slightly, see, the reason I took questions from RTP this time is inventories, where I found some typical questions given, and which will help you understand how to solve the questions in the examination. I don't expect such tricky question to come in the examination, but if you practice this, you'll get some amount of confidence. Okay. Now here, Submarine Limited keeps no stock records. Okay, so they are not keeping stock records. It is not allowed. Okay, actually, under for audit, you have to give comments whether they are maintaining inventory records or not. Okay, so in real life, you'll not get a situation where stock records are not maintained. But a physical inventory of stock is made half yearly and the valuation is taken at cost. Okay. Company's year ends on 31st March of 21. Okay. Accounts have been prepared to that date. Okay. Stock valuation taken on 31st March, however, was misleading, and you have been advised to value the closing stock as on 31st March of 21 with the stock figure as on 30th September 20 and some other information available. Now here, are we going forward or going backwards? Yes, guys, are we going forward or going backward for valuation of inventory?
Sir,
Backward.
Backward or forward?
Backward.
Back.
See, when I say backward or forward, they say 31st March inventory is misleading. Okay. They said you take 30th September 20 inventory and calculate the inventory as on 31st of March. In the earlier case, we went back. Taking 15th April, we went back. In this question, taking 30th of September, we have to go forward. Are we clear?
Yes, sir.
Okay, so come on. The cost of stock as on 30th of September, as shown by the inventory sheet, was 2,40,000. So this is a simple one again. $2,40,000. Okay, then on 30th September, stock sheets showed the following discrepancies. A page total of 15,000 had been carried to the summary sheet as 16,000. Now, what does this mean? Sir, why are they mixing
Inventory overvalued.
with inventories?
Inventory is overvalued.
So what? So we are saying 240 is the as per inventory sheet. What should be the actual value?
$239,000.
Should this 1,000 of discrepancy should be add to the inventory or should be reduced from the inventory?
Reduce.
Because they would have taken one page, they would have totaled that as 15, but when they posted in the final master inventory sheet, like you do working note, you write one amount, and while preparing the balance sheet, you write some other amount. Similarly, here also in the workings it is 15. In the summary sheet, they have written it as 16. So we have overvalued inventory by 1,000. So now we have to reduce the inventory value. So let's excess amount carried forward 1,000. Are we clear with the logic? Yes, no, maybe.
Yes, sir. Yes, sir. Yes, sir.
Okay. Good. Then the total of the page had been undercast by 600. What does this mean?
We need to add back. Like the total is been less.
Total you have understated. you need to add back, right?
Add back.
Not a rocket science. Then invoice of purchases entered in the purchase book during the quarter from October 20 to March 21 total 2,10,000.
Invoice of purchases, okay. Now this 9,000 related to the goods received prior to 30th September.
Out of this, 9,000 related to the goods received prior to 30th September. Invoice entered in April 21 relating to the goods received in March 21 total 12,000. So there are three things here. Okay, we'll take one by one. We'll not mix all of these things. What should we do with that 2,10,000?
We should add.
Why should we add?
Is
So
inventory.
because it would have increased the inventory.
Right, because we are going, see, what are we doing? We are going from 30th of September to 31st of March. So whatever are the purchases made here, we have to add them, right? So the purchases of 2,10,000 we will add. Then out of this 9,000 related to goods received prior to 30th September. Okay, so we recorded in purchases book 2,10,000. Out of that, 9,000 pertain to the goods received prior to 30th of September, and we are valuing inventory as on 30th of September. So this 9,000 of purchase is not related to this period. For this period, the total purchases is 2,10,000, out of which 9,000 pertains to the prior period. So we will not consider that. Okay. So less purchases pertaining to prior period. How much? 9,000. Okay. Then invoices entered in April relating to goods received in March total 12,000. Will we include this in inventory or not?
Include, sir.
Yes, sir. We will
Will
include.
include, sir.
We will include because we are valuing inventory as on 31st of March. These invoices were received in April, but goods were received in March. The goods were purchased in March, and because they were purchased in March, they will be included in the inventory. So add purchases recorded in April. How much is the amount? The amount is 12,000. Okay, then it's done. Then sales invoice to customers total 2,70,000. Similar adjustment, just ulta. Out of this 15,000 related to goods dispatched before 30th September and good dispatch before 31st of March but invoiced in April total 12,000. So again here also basically what has happened is we are on 30th of September and we have to value inventory on 31st of March. Okay, they say invoices of purchases entered in the purchase book, sorry, sales invoice to customers total 270. So in this period you have made sales of 270. Out of that 15,000 related to goods dispatched before 30th of September. So 15,000 you will exclude from this. Then goods dispatched before 31st March but invoiced in April was 12,000. So you will add this. This 12,000 was invoiced later. You will add that because that is a part of the sale. And 15,000 was invoiced before 30th of September. You will exclude that because that does not pertain to this particular period. Are we clear?
Yes, sir.
Okay. Now, why are we doing this adjustment minus 15,000 and in purchases also? Because when you do it, carry inventory here, this amount of goods have already been dispatched. Okay. This amount of goods have already been dispatched and they are not included in this inventory as on 30th of September. Right. So while doing this adjustment, you should not do it again because anyways it is not there on 30th of September. You should be adjusting the sale value after. So 220 minus 15 plus 12 will be how much? 240 is the sale value. sorry, 270, not 240. How did I do it? 270
Plus 67.
minus 15 plus 12 is minus 3000. I did minus 30,000. Okay, 267, right? So less cost of goods sold, net sale value 267, and have they given something on gross profit? The gross margin earned by company is 25% of cost. So they said 25% of cost. So you have to take cost as 100, profit as 25, sale at 125. Now, how much is the sales you have calculated? 267,000. We need to know how much is the profit. So you do a simple cross multiplication. 267,000 multiplied by 25 divided by 125. So how much does that come to? 267 multiplied by 25 divided by 125. You get profit of this minus this, that is 2,13,600. And lastly, during the final quarter, credit notes at invoice value of 3,000 had been issued to the customer in respect of goods returned during that period. So 3,000 is the goods that has been returned. Okay. Now, if goods have been returned during that period, will you add it or will you reduce it?
Add it.
Added,
Add
sir.
it. Okay. So add goods returned. How much? 3,000 less profit
600.
225 divided by 125. So this is the thing you will add it, right? So what is the value of inventory? Value of inventory comes to 668,600. No.
So that
Minus 241400. Now this 3,000 I could have adjusted here also. Okay, instead of doing it here, I could have adjusted in the net sales and I've done it that way also. That way also it is fine. Any questions in this?
no, sir.
Are you comfortable with inventory valuation now? Any specific problem you had when you were preparing? Any specific part you are not able to understand in inventories? You can write it out in the chat box.
No doubt, sir.
Any specific question, query? Or all of you are comfortable with inventory related questions?
Yes, sir. We are kind of comfortable after this session.
Okay. So again, even in inventory, one is to, if you just note down the dates and the movement, you'll be able to understand. And the other thing that you should be, very careful about is, or you should accept is, even if one adjustment is difficult, don't leave that question. For whatever entries are correct, you'll get marks for it.
Sir,
Yes.
sir, the question which we have done previously, in that we have sale of goods on approval, right?
Correct. Let me come back to the question. No, this one.
So
Yes.
in this question, in that sale of goods on approval, they are not included in sales.
Correct.
But what if they are included?
If they are included, then here also you have to do the adjustment when you're calculating sales, right?
Yes, sir.
No, I didn't get your question. Can you repeat?
Sir, here we have a practical problem in the ICI material, fourth one. So in that they have given that sales, they have given the value and they have said in that sale of good on approval value is also included.
Just a second. No. Question number?
Question number 4, practical problems. Sir, if you have time, could you please explain this fourth one, sir?
Yeah, we'll do it. No, we'll quickly. I can spend some more time. No, there are only 3 questions. No.
The fourth one is there, sir.
Achha, these are answers. Sorry. Okay. Yeah, we'll do it. No problem. Physical verification of stock in a business was done on 23rd of June of 2020. Okay. So when is the physical verification? Physical verification is on 23rd of June of 20. COVID time. I don't know how did they do it. The value of stock was 48 lakhs. So on this date, value of stock was 48 lakhs. Okay. The following transaction took place between 23rd June. Oh, so it is 30th of June. So let me 23rd of June, 48 lakhs, and 30th of June, they have given something. Goods sent on consignment. So one thing you would have noticed, the question difference in the question is that in the previous question we solved, we are moving backwards. Here we have to move forward. That is one thing. Then goods sent on consignment, goods at cost worth 2,40,000 were unsold. So this is very simple. You have sent it on consignment, it is unsold. What will you do with this?
So inventory on consignment.
Consignment stock.
It is consignment stock. Will you add it to the stock or not?
Add.
Yes, sir.
So 48 lakhs plus 2.4 lakhs of goods sent on consignment. Okay. Purchases of 44 lakhs were made, out of which goods worth 160 were delivered on 5th of July. Now, what will we do with this? What is the purchases made?
4 lakhs, sir.
4 lakhs. Then with that 4 lakhs, what will we do with this 4 lakhs? Will we add or will we reduce?
Sir, we'll add 4 lakh net of that 1,60,000 which were later received, sir.
Why?
Sir, because that 1,60,000 was not received until the date of calculation of inventory.
Correct. So there are two assumptions possible. Here we can assume that this particular question is asking us determine the value of stock on 30th of June. So if they are asking determine the value of physical stock on 30th of June, which means you have purchased goods worth how much? 13,64 lakhs, and out of which 1,60,000 were not delivered on 30th of June. So that is not in hand. Correct?
Yes, sir.
Correct or not?
Yes, sir.
Okay, but is that our inventory or not?
It's our inventory, sir.
So
Yes.
what happens is on this you will have 4 lakhs minus 1,60,000, which is your purchases which you have received, and 1,60,000 is in transit. Clear?
Yes, sir.
Sir.
Okay. So that is also part of our stock.
Yes, sir.
Okay.
Yes, sir.
Then, clear, right, so far?
Yes, sir.
Then sales were 1,360. Now coming to sales. Oh, I'm not sharing that screen. Sorry. I wrote something here, but I think it's understand nothing complex. Sales is 1,360, which include goods worth 320 sent on approval. $320 is sent on approval. Then half of these goods were returned before 30th of June. Half of these goods were returned before 30th of June. Now, is that part of goods which have been returned, are they my inventory?
Sir, both are inventories, sir.
Correct. So I am splitting into 2 parts. 320 that has been sent on approval. Okay, that were a part of sales. Now, whatever we have sent on approval basis, if you reduce 320, 1360 minus 320, how much do you get? Just a second. 1360.
10,40,000.
1040, sir.
10 lakhs.
40,000.
This is my normal sales. Okay. This
Yes,
is my
sir.
normal sales. And what does it they mean? What did they mention? They mentioned that half of these were returned before 30th of June. Means balance half is not yet returned. That is one thing. Okay. Then of this sales that has happened, whatever is the cost of goods sold, this I will reduce from my inventory. So let me just put the number here. It will be clear. Sales 1360 less sale on approval, because see the question did not mention whether the balance has been approved or not approved. Okay, so 1360 320 is on approval basis. So 1360 minus 320, 1040 is your normal sales. Then what did the question say? Half of these were returned before 30th of June. So will that be a part of my inventory? Yes. Even the balance half will be a part of my inventory. Correct or not?
Yes, sir.
Correct or not?
Yes, sir.
Okay. So if you have to see on this, what is the gross profit ratio? Goods are sold at cost plus 25%. However, goods costing 240. Am I referring to the same? Goods costing 240 had been sold for 120. Okay, so there is another adjustment. That is total sales is 1040. Okay, and out of this, how much is the abnormal sales?
2,40,000. 1,20,000.
Sales is 240 or 120?
120, sir.
Thank you, sir.
120.
Sales is abnormal sales is 120. Normal sales is 1040 minus 120, that is 920. Okay. Now gross profit or loss. The question says 20%, 25% on cost. So 25%. If cost is 100, profit is 25% of 100. Sale value is 125. So my sale value is 920. On this, profit will be 920 multiplied by 25 divided by 125, which comes to 1,84,000. Right? So on normal sales, 184,000 is my profit. On abnormal sales, there is a loss. How much? 120 is my loss. That's what the question said, right? 240, costing 240, so 120 is the loss. So my gross profit is how much? 184 minus 120, I get 64. So less gross profit 64,000. Okay, 64,000. So my cost is 1040 minus 64. That comes to 9,76,000. Are we clear?
Yes, sir.
So just to plot the numbers. Value on 48 lakhs. 48 lakhs. Then Goods sent on cost consignment, goods worth 2 lakhs, 2,40,000 is unsold. So that is my stock. Then purchases of 4 lakhs plus transit 4 lakhs. Okay. Then the following transaction took place between this and this date. Sales were 1360, which includes 320 sent on approval. Half of these were returned before 30th of June. So adjustment for sale. Cost of goods sold we had calculated somewhere here. That was 976. Okay. Now, cost of goods on approval basis. Is this my stock? See, 160 the customer has returned. The balance 160 is my stock?
Yes, sir.
Yes or no?
Yes, sir.
Is the balance 160 my stock?
Yes,
Yes,
sir.
sir.
So 160 into 25 divided by 125. This is my stock. 100 divided by 125.
128.
is stock. So if I do the summation of all of this, did I miss out something? 4592. Let us see what is the solution. $44.64. Just a second. Cost.
Sir, in sales, we have not calculated 1,28,000 that are sent on approval basis. That's we have not received approval yet.
Correct. So that is not considered to be sales, no?
Yes, sir. That is not considered to be sales.
Correct. We did not consider it to be sales. This is fine. 128 cost of sales. So here also they did the same thing, no? 1360 minus 160, 12. Okay. Gross profit 96. So how did they get gross profit 96? Less abnormal.
Sir, to like hide one mistake, they did another mistake here.
Sorry?
So like they did one mistake, no sir. Here like they considered like 2 times this approval basis.
No, not 2 times. So what they have done is, just a second. Let me come back to the question. Okay, I didn't see this question earlier also. So half of these were returned before 30th of June. Okay, so that we don't know which date has this been returned on. It says following transaction took place between 23rd June and 30th of June. So whatever is returned should be a part of your inventory, and whatever is with the customer, that should also be a part of your inventory. They have assumed that, okay, so here I think there is a slight difference in the assumption. What they have assumed is, here, out of 1360, they have considered 160 as sold. Are you getting it?
Yes, sir.
Okay, that is the assumption they have taken. I don't know whether they mentioned it or not. So if you take that assumption, no, that but 160, sorry. See what they have taken the assumption that 160 is sold. We have taken the assumption that entire thing is not sold because the approval has not come yet. Because the question did not mention anything about approval. The question simply stated that sales include for 320 ton approval. Half of these were returned before 30th of June. That's what they said. And the balance half is not yet returned. And that is also our stock. Correct?
Yes, sir.
So what they have done is they have considered 160 as not yet sold, and basis that not linked. Six. Okay, so this is how they have done. Let me put some more thought on this. But did I clarify your doubt?
Yes, sir. Sir, if we get this type of question in exam, we have to write a short note on this.
Yeah, you have to make an assumption, because see, the question is not very clear. The question does not say that, sales were 1360, includes goods worth 320 sent on approval. The question says only half is returned. Now, if we assume that the balance half is sold, but so sale, see, the important question that we need to ask is, when did the sale happen? If you are assuming that the balance half is sold, then it should be considered as a part of sales. If we assume that because no information is given, the balance half is not sold, then that is also a valid assumption. In fact, if you see any question paper, they will write on the top, candidates are advised to make suitable assumptions. You have to make an assumption and solve the question. Are we
Okay,
clear?
Sir,
Yes, sir.
they have
Uh,
assumed it as sold, right?
Sorry,
In this problem, they have assumed it as sold.
they have assumed it as sold, because that is why they removed only 160. The remaining 160 they have assumed to be sold. And
Yes,
both
sir.
the assumptions are valid. Okay, there is nothing like this assumption is valid or the other assumption is valid. Both the assumptions are valid. And while checking papers, they will give instructions that alternatively this can be the assumption.
Sir, but in if this question was in the year end, like
Question was in the
dated 31st March or 31st December, that yeah, books are closing.
so no, books can close on 30th of June also. No,
30th June.
yeah,
Financial,
you
sir.
have quarterly closures.
Okay.
So there is no rule that books have to be closed only on 31st of March. If you look at a lot of listed entities, they close the books on quarterly basis. In fact, abhi June, so 30th June will be the closure season.
Okay, sir.
Okay.
Okay.
So thanks for your time. So next topic, as agreed, will be consignment. Okay. So we are still on 3rd of June. We'll try to have 2 more sessions and cover consignment properly in that. That is one topic where a lot of you have faced difficulties or you have some doubt. Actually, it should not be difficulty, especially with related to how to value stock, abnormal loss, normal loss, or is there anything else?
Nothing else.
Sorry,
Nothing else. Only 3 items they are
3
confusing.
items. No, that is where we get confusions, and remaining all the simple debit and credit you can do. That is not a problem. Correct?
Sir,
Correct or
if
not?
you have, yes, correct.
Right. So normal loss, abnormal loss, and I'll give you a simple trick which I've given in the class also. I'll re-emphasize on that. And if anyone has any question which they want me to solve in the class, you can let me know so that I can solve that question in the class as well. Right?
Okay, sir. Sir, if you have 2 minutes, one rectification entry I have confusing in final accounts.
Okay, tell me.
Purchase includes sales return and sales include purchase return.
What kind of so what happens? Purchase includes
Sales return.
of how much?
Any amount, sir, they are giving in adjustment, they are providing that. And sales include purchase return.
No. Are you asking me to write rectification entry or do you want me to show the treatment in final accounts?
Rectification entry only.
rectification. So purchase includes sale return of 1000. So, okay, so purchases includes means purchases are overstated.
Yes.
So credit purchases. Okay, and debit sales return. That's it, right? Why are you confused?
Okay. Sir, this entry is confusing a lot. In final accounts, you're providing adjustment has purchase includes sales return and sales.
So if
includes
they say purchase includes sale return, remove sales return from that
okay,
and show it sales, so show as sales return separately.
okay.
Why are you
We
getting
have to
nothing to be scared, no?
we have to deduct from both sales and purchase.
See, okay, so because purchases include sales return, you will reduce from purchases.
Okay.
Okay. And because it is a sales return, you will reduce from sales. Simple.
Okay, sir. Now got it.
Got it, no?
Yes, sir.
If at all, see, I remember two exams actually in my entire CA journey. Two papers were bouncers, costing in CA Inter and financial reporting in CA Final. And the only option we have at that point of time is to, whichever is the bouncer question, do it at the end.
Okay.
Don't, I'm telling you, every one of you, don't get unnecessarily stressed out. Array, I'm not able to solve. What will happen? Time is running out. Nothing will happen. 50 to 60 marks, I can prove. Get me any paper, I can prove and tell you 50 to 60 marks will be able to attempt and score easily. There is what what happens. The problem that happens with a lot of us is stress. Oh, one tough question, tough question, tough question. Leave that tough question. Attempt remaining 80 marks. In 80 marks, you can easily score 50 to 60 marks. Focus on that. Don't focus on that 20 mark paper or 20 marks question or 10 marks question, whatever it is. Clear?
Okay, sir.
Okay, everyone, I'm telling you, whether it is mathematics or your business law or your BCK would be easy for most of you. Anything you find, I don't know. I spent so much of time in remembering CEO, CFO. Now I don't remember. Ignore. 1 or 2 marks will not impact. Ensure remaining questions you do properly. Okay.
Okay. Okay.
Chalo,
Sir.
see you on
Yes, sir.
Wednesday with consignment. And we'll also take up some, if you have any issues in final account adjustments, let me know. I'll try to cover that as well.
Okay, sir.
Okay, chalo, take care. Bye-bye.
Bye-bye.
Thank you, sir.
Yeah, thanks. Bye.